Welcome back to The Explainer. Today, we're diving into a total market mystery that basically took over August 2026. I'm talking about the massive, and I mean massive, surge of AST Space Mobile, trading under the ticker symbol ASTS. Whether you're an institutional heavyweight, tracking market anomalies, or just a tech fan fascinated by next-gen trends, you have definitely seen this stock flying high. We are going to break down exactly what happened, why it happened, and what it actually means for the future of global connectivity.
Okay, let's dive into this. $27.29 billion. That is AST Space Mobile's approximate market cap right after this insane August rally. But here's the kicker, the thing that really grabs you. We are looking at a pre-commercial company being valued at nearly $30 billion. That sheer scale of investor expectation is wild. How does a company without full-scale commercial operations command that kind of premium? Well, that's exactly what we're going to figure out today. To make sense of all this, here is the agenda for our explainer today. First, we'll look at the $30 billion surge itself. Then, we'll unpack the 5 specific catalysts driving that growth. After that, we'll take a look under the hood at how the technology actually works before pivoting to the major financial risks, because we absolutely have to keep it objective. Finally, we'll wrap up with Wall Street's verdict.
Section 1. The $30 billion surge. Back on August 4th, 2026, ASTS stock just went ballistic. It spiked over 10% in a single day, capping off an unbelievable 5-day run with a 30.5% gain. That momentum pushed the price to around $71.94 a share, which was its highest level in almost 3 weeks. Now, to keep things grounded, while the stock is up an impressive 30% over the past year, it actually remains down just a bit, about 5.5% year-to-date. But you can't deny that August rally was explosive. So what exactly lit the fuse?
Section 2. 5 catalysts driving growth. Now, what's really interesting here is our first catalyst, a totally unexpected connection with Meta platforms. A Meta executive recently revealed that they held a technical workshop with AST Space Mobile. Why? To see exactly how WhatsApp could run straight over AST's satellite network. Vinod Samarawa-Krema from Meta essentially said they've moved way past just proving the tech is feasible. They're actively trying to build, quote, a seamless product experience that people will actually use. This is a huge deal because they're talking about broad consumer applications, like video and voice for remote workers or travelers, far beyond just sending a basic emergency SOS text.
Catalyst number 2 is pure hardware success. Literally the day after the Meta news dropped, AST successfully launched its BlueBird 11, 12, and 13 satellites on a SpaceX Falcon 9 rocket from Cape Canaveral. And guys, these are not your average satellites. These are the largest communications arrays ever put into low Earth orbit. Because they are over 3 times the size of their initial Block 1 satellites, they have drastically bumped up direct-to-device service speeds. We're talking peak download speeds essentially doubling, now hitting up to 280 megabits per second.
Let's rapid fire through the final 3 catalysts. Number 3 is European expansion. AST is moving fast, running integration tests across 8 European countries with absolute telecom heavyweights like Vodafone, Orange, Telefonica, and Deutsche Telekom. Catalyst 4 is their push into the Japan market, prepping for their very first international direct-to-cell launch with Rakuten Mobile. And Catalyst 5, this one's a bit ironic, is the SpaceX factor. SpaceX recently released an earnings report that really calmed investor nerves about high spending in the space sector. Plus, retail traders started viewing SpaceX less as just a carrier partner and more as a potential competitor. And paradoxically, that actually boosted demand for AST Space Mobile, as people wanted to back a strong, independent alternative.
Section 3. How the technology works.
So the crucial point is this. AST is building a space-based cellular broadband network that connects directly to standard, unmodified smartphones. You don't need a special clunky satellite phone, you don't need a bulky antenna, and you don't even need to download a specific app. Massive phased arrays in low Earth orbit. We're talking about 2,400 square feet of hardware per satellite do all the heavy lifting. Your everyday device just naturally connects, and the regulators are totally on board. In April 2026, the FCC officially granted them commercial authorization to deploy 248 satellites using spectrum from their mobile partners.
And the scale of this ambition is just massive. $3 billion. Through strategic hookups with titans like AT&T, Verizon, Alphabet, and Vodafone, AST has partnerships with over 60 mobile operators. Combined, those operators cover over 3 billion subscribers globally. To back that up, AST has already secured over $1.2 billion in contracted revenue commitments from those partners. And to actually start serving this colossal user base, they are laser-focused on getting 45 to 60 satellites up in orbit by the end of 2026.
Section 4. The major financial risks. And the numbers here brilliantly illustrate the stark reality of their current financials. In the second quarter, operating expenses hit a staggering $329.1 million, while Q2 revenue was just $31.5 million. Basically, their operating expenses doubled from the first quarter. That left them with a much wider net loss of $230.9 million. Now, their revenue did jump quite a bit from the $1.16 million they pulled in a year earlier, but it still missed the $34.5 million that analysts were expecting. Bottom line, they are burning through a massive amount of cash to get this constellation built and launched.
Which brings us to extreme valuation and execution risk. The stock is currently trading at roughly 347 times sales. For context, the sector median is just 1.29 times. It also has a forward PE ratio of -44. Basically, investors are betting the entire house on future commercial revenue actually materializing. If deployment slips at all, that whole narrative breaks. Plus, there are some very real questions about actual consumer demand in developed markets right now. Competitor T-Mobile recently pointed out that their direct-to-device traffic made up just 0.0003% of total network usage during the peak summer season. That is a microscopic fraction. It means AST's $30 billion valuation is currently riding on a totally unproven consumer habit.
Section 5. Wall Street's verdict. Let's move to and see how this builds a picture of overarching hesitation over on Wall Street. Current analyst ratings sit at 4 buys, 7 holds, and 2 sells. So the consensus is definitively neutral right now. However, there is definitely some optimism bubbling under the surface. B. Riley analyst Mike Crawford recently upgraded AST from neutral to a buy, and Piper Sandler just initiated coverage with an overweight rating. So, while the broader consensus is to wait and see, momentum amongst some key analysts is definitely tilting toward the positive. If we look at the price targets, the consensus mean sits at $80.48, which implies roughly a 12% upside from its current trading levels. But check out that bull case fair value narrative, $170. That suggests the stock could potentially be nearly 58% undervalued. But again, that $170 dream hinges entirely on absolutely flawless execution as they move from a tech demonstration to a full commercial rollout. The company itself is holding firm, recently reaffirming its 2026 revenue guidance of $150 million to $200 million. They expect that revenue to build sequentially over the year as they shift from initial gateway sales and consulting into actual everyday commercial service. So, that brings us to the ultimate question. Is AST SpaceMobile a buy at these levels? We are looking at a company at a truly critical inflection point. They've got the FCC approval in hand, massive next-generation satellites up in orbit, a staggering 3 billion subscriber potential, and the direct attention of tech giants like Meta. But on the flip side, they are racing against the clock with massive financial losses and banking on a highly speculative consumer market. Can they successfully evolve from being a promising technology demonstrator into a real, revenue-generating commercial powerhouse? I'll leave you to reflect on the data we've walked through today. Thank you so much for joining this explainer, and keep learning.